leading Republicans are looking at scaling back some of the corporate tax cuts that they are trying to usher into law, two people involved in the tax negotiations said, convinced that they need to find new revenue to make last-minute fixes to the giant package moving through Congress. The House and Senate passed separate tax cut packages in recent weeks, and both bills would lower the corporate tax rate from 35% to 20%. But GOP negotiators are openly discussing the possibility of moving that rate up to 22% to free up more revenue, people familiar with the discussions said. One of those people said the 22% rate is seriously under discussion. The two people spoke on the condition of anonymity because they are not authorized to discuss sensitive negotiations. No decisions have been made. The White House has been resistant to making this change, but President Donald Trump said casually on Saturday morning that the 22% corporate rate might be necessary. Each percentage point that is added back to the corporate rate would free up about $100 billion in revenue over 10 years. Still, White House officials have tried to stress to Congress in the past 2 days that their strong preference is to keep the corporate rate at 20%. Senate Finance Committee Chairman Orrin Hatch, Utah, said he, too, was resistant to raising the rate. "Not as far as I am concerned," he said. "It's still 20. The House and Senate must pass matching tax bills before Trump can sign the package into law. But there are a number of changes Republicans want that would make the legislation more costly, and the package cannot add more than $1.5 trillion to the debt over 10 years. One of the changes they are considering would repeal, or at least severely scale back, an alternative minimum tax for corporations that tries to limit the deductions and credits companies can take. Another major change receiving growing attention would allow Americans to deduct up to $10,000 of state income tax or local property tax from their federal income tax. The House and Senate bills would only allow Americans to deduct the property tax component, but lawmakers are looking to give people more flexibility. Another leading Finance Committee member, Sen. Patrick Toomey, RPA, cited both of those issues in acknowledging that Republicans are looking for new revenue sources to address lingering problems. "So we all understand there are some things that are going to have to change. So we're going to have to figure out how to do that," Toomey said. "But I am not predicting that we're going to go to a 22% corporate rate." The White House and Republican leaders have heard numerous complaints from wealthy GOP donors in California and New York who believe their taxes could go up under the new regime because of limitations on deductions. They are trying to make changes to address those concerns before the package is completed. Trump referenced these complaints Wednesday when he said that the final GOP tax bill should take care of the tiny little sliver of people who don't benefit under the legislation as written. The president's comments came as House and Senate Republicans worked to iron out differences between the tax bills passed by each chamber, with the goal of sending compromise legislation to Trump before Christmas.